Good morning, everyone. Thank you for joining us today as we introduce our Bridging CBILS offering. I'm Josh Levy, CEO of Ultimate Finance, and I'm delighted to be joined by Cavanagh, Head of Bridging Finance. It's really great to have a range of introducers with us this morning. Just looking at the list, we can see some regular long-standing broker partners all the way through to some new names, faces, and hopefully relationships that we can form from this. We've got a range of topics to cover this morning, but the key theme in all of this is working together during challenging times. So whilst the focus has rightly been on the struggles of small business since the outbreak of COVID-19, the recent months have obviously not been plain sailing for lenders or brokers either. We've had to learn as many new acronyms as the government could dream up: CJRS, CBILS, BBILS, and many others, whilst also adjusting to remote working setups and other challenges in our lives. I'm sure you've all been invited to more webinars about CBILS than you'd care to remember, so we're very grateful you chose to join ours this morning. Just on that theme, the role of a broker has never been more important than through the last 3 months and kind of the near term, absolutely. Lenders have come and gone from the market, credit criteria has moved up and down, and generally the property lending market has been somewhat in a state of flux, all the way from first-time buyer mortgages through to development and bridging finance, as we've seen. The value that's given in helping borrowers navigate these changing markets to find the right solution is massive. And so the key message from Liam and I to everyone we've worked with over the past year is thank you very much for your support. We very much consider you to be our partners and would always look to approach our business interactions in that spirit and look forward to forming new partnerships in the months ahead. Over the next 30 minutes or so, we'll go through the ways in which we can continue to work together to support our clients. We'll introduce you to our newly expanded CBILS accreditation, which now includes bridging, and then Liam will share some insights from the front line on the short and medium term market outlook. And there's a Q&A box on the right hand side of the page, so please do use that and write in there if you've got anything you wish to ask, and we'll look to provide answers at the end of the presentation or follow up directly afterwards. So just before we get into the main purpose of the webinar, I thought it would be worthwhile explaining for those who don't know us well who we are and how we fit into the Tavistock Group. Ultimate Finance has been providing funding to SMEs for the best part of 20 years, but it's really been the last 5 years where our development has accelerated to create the business we are today, a national multi-asset lender, a combined loan book of over £265 million, specialising in 3 main areas: bridging finance, working capital finance, and asset finance. As we've grown and experienced some inevitable growing pains along the way, we've sought to really build our business around what our customers and what our introducers require and value most. And that's really focused our minds on 4 things really: speed, clarity of approach, developing and using the best technology tools available, and flexibility. Our aim is to be seen as a relationship-based lender, not a transactional one, but clearly being able to deliver at a transactional level is an important part of our service. This ethos really comes from our heritage and our ownership. Tavistock is a truly unique shareholder. For those of you that don't know Tavistock, it's a global family office investment group that was started and owned by entrepreneur and billionaire Joe Lewis. Tavistock owns 200 companies plus worldwide, mainly across the UK, US, Australia, Mexico, and the Bahamas. And there's a big weighting towards the 3 core sectors you see on the page here: financial services, real estate, and sport and leisure. Tavistock and Joe are probably best known here for owning Tottenham and leading the redevelopment of what is quite possibly the best stadium in Europe. And yes, I'm biased on that, but it's obviously we've got a stadium capacity of 60,000 people, which is really great when you're only allowed 300 people in to watch the games at the moment. But that's a different subject altogether. And the other large investment in the UK is Mitchells and Butlers. Again, 1,800 closed pubs and restaurants. Has not been particularly enjoyable for anyone over the last 3 months, but they've now started to reopen, so please do drink irresponsibly. So the support we've provided to our clients and the UK's SME community as a whole, in terms of who we speak to in the last 3 months, broadly breaks down into two categories. The first category being proactive, which is where our CBILS accreditation fits in. We now have 3 sets of CBILS accreditation. This really enables us to keep providing the necessary funding solutions for SMEs, and we'll come on to in more detail on this shortly. And also it's important to say that at no point did we withdraw from the market at the time of its most need through any of our non-CBILS lending options. The second category is reactive. For bridging, we've shown immense flexibility and understanding about delays to repayment dates, and Liam will cover this in more detail later. For asset, we've given over 500 payment holidays across a total of £20 million of agreements. And for our working capital, our Invoice finance clients, we've given extensions to recourse periods, we've postponed automatic inflation-linked service fee rises, and we've considered requests for temporary drops in minimum fees through this time. We're not a bank. We've had no support from bank funders or from the government, so none of this support has been an easy give, but is 100% the right thing for us to be doing in the circumstances. In a number of these areas, coming back to my earlier point, the value of brokers and lenders working together has been massively demonstrated, so thanks for that. I'm sure none of you have been living under a rock for the last 3 months, so you'll be well aware of what CBILS is. We were delighted to announce on Monday that we've been formally accredited by the British Business Bank for Bridging Finance as an approved lender. This adds to our existing accreditation for asset finance and term loans to our new and existing Invoice finance clients. So we've completed a set. We expect to be able to go live with our bridging offering tomorrow. Please make sure you're following our LinkedIn channel for updates. You'll also receive an email when we do go live officially, and that will contain summary materials from today, including these slides and our criteria documents and application forms. So just a quick recap on the scheme. There's obviously now 90+ lenders accredited across the different products, mainly in the term loan category, the standard product that everyone is grabbing. We probably have the broadest range on offer. But in total, there's been over £45 billion worth of funding provided under CBILS, BBILS, and the larger variant of CBILS. So incredible levels of support to an SME group that has traditionally been reluctant to use external finance. The scheme allows for lending of up to £5 million to SMEs. There's a government guarantee to lenders of 80% on outstanding loan balances once the proceeds of any recovery process have been obtained. The borrower remains fully on the hook for the loan. It is a loan. In a failure scenario where our security doesn't allow us to recover our position, we always suffer a loss. The guarantee just reduces that loss. For the borrower, they've got access to fee-free lending for 12 months with interest payments and lender levy fees covered by the government's business interruption payment. And we will cover a little later which fees are covered and which are not through our bridging product. As a lender, we have to pay a scheme access fee, which is a percentage on every new loan provided with the guarantee. In terms of personal guarantees, this was a point of contention at the start of the scheme. No PGs can be taken on facilities of up to £250,000. But otherwise, as a lender, we need to take our normal security package, and that includes PGs above £250,000. The PG itself is capped at 20% of the outstanding balance, and importantly, the primary residential property of the borrower can never be used through a recovery process unless that borrower themselves volunteers it. And then just the part at the bottom is something we're asked about a lot, as I'm sure many of you are. It's the interaction between CBILS and bounce back loans. So multiple CBILS facilities can be taken out by a group of companies. There remains subject to that cap of £5 million across all facilities, and obviously all other eligibility criteria. And this can be across different types of CBILS products and also different CBILS providers. A business cannot have a bounce back loan on a CBIL. That's within the group of companies. So any CBIL would need to repay a bounce back loan in full. And at the moment, all schemes are currently open until the end of September, and there's been no specific news yet on any possibility of an extension. I think probably unlikely. So the headline scheme criteria is covered here. UK business, turnover of less than £45 million across the group, viable business pre-coronavirus, but negatively impacted by its outbreak. Instead of spending time on this generic criteria, I just want to move on to how it applies to our bridging offer. So the scheme itself works on the basis of pretty well-defined propositions that are thoroughly assessed and signed off by BBB, and I hope through this you'll see that our proposition is as simple and clear as we could possibly make it. We are only doing first charge residential bridging. There's 4 defined uses that I will cover later, but it's mainly for refinancing purposes only. It's important to stress that anything outside of the criteria or these uses we are not able to do, and that includes things like semi-commercial assets and certain cap raises. Our lending will be from £100,000 to £2.5 million. There's a fixed term of 12 months, and obviously the interest is covered by the government during that 12-month period. With the guarantee, we can go up to 75% on a fully service basis. Obviously, the service element is covered by the BIP, and when you compare that to normal market lending at the moment, around 65 to 70% on a rolled basis, I suspect, is what the market norm is at the moment. This can obviously be used to generate significantly higher amounts. This obviously doesn't, and it's important to stress, it doesn't negate the need for a clear exit plan, which needs to show the ability to repay the loan in full at the end of term with appropriate headroom to that plan. On the loan size, so there is a defined maximum. The terminology in the rules, and I quote, is defined liquidity need, and this is limited to liquidity needs on the asset or project that we're lending against. So that can include redemption amounts, fit-out works, and transaction costs, but no other capital raise for non-identified needs can be provided. We can't give general working capital, and nor can we provide capital for projects outside of our security package. Our development exit or finishing exit product is suitable for this, and we can provide that finishing capital where it relates to non-structural fit-out works. There's no early repayment charge beyond month 3 and no exit fee. And obviously, just important to note, as a government scheme, there is a level of inflexibility around certain processes we must follow, certain documents that need to be signed by the client, but also around applying the consistency of criteria that BBB have signed off on us. So there will be, and we've been stressed this a number of times in our interaction with the government, there will be a post-CBILS audit of every lender, and the consequences of misrepresentation would likely mean having to foot the bill for the interest-free period given to the client and therefore reclaimed from the government. So we simply cannot afford to get this wrong. Before handing over to Liam, just to go through a bit more detail on that criteria. Turnover or expected turnover of our prospects must be less than £45 million across their group of linked companies, and within this, more than 50% of this turnover or expected turnover must be from UK commercial or trading activity. So this can include income, and for this purpose will include income from selling property or rental income, and it can be expected turnover rather than historic actuals. We're lending only to UK limited companies, and there must be a business purpose behind it, and the funds must be used for UK projects. The borrower themselves can have no history of financial crime or fraud, and this for us is a zero tolerance approach. The business must have been negatively impacted by coronavirus, and there will be a self-certification element to this as well from the borrower. In most cases, this will likely involve a scenario where a refinancing or sale event has been delayed due to market conditions. The viability of the borrower is key, and I've got a separate slide on that shortly. The borrower again needs to be experienced, and we're looking for net worth outside of the security we're lending against, and just as a guide on that, we're looking for upwards of 50% of the loan value to be covered by that net worth outside of the security. For affordability, we're assessing essentially the strength of the exit plan within the 12-month loan, and it's no real difference to how we would normally assess the strength of an exit, and Liam will touch upon that a bit more later. I've already covered the bottom 2 parts around max loan size based on identified project liquidity needs, and also the interaction with bounce back loans within the group. So eligible uses. The first scenario is refinancing from a development finance facility. This can include releasing up to 15% of the property value for non-structural fit-out completion works. And this scenario is basically where the borrower cannot exit their current facility that is due for repayment and needs time to seek that permanent finance solution or a sale, and possibly also to finish works before seeking either of those exit options. The second scenario is perhaps a little less likely to arise, but it's a refinancing from a buy-to-let facility. This will likely be due to things such as not being able to service a facility due to delays in sourcing tenants, for example. So the third scenario is refinancing from a current bridging facility. And so this is where the borrower has not been able to secure the exit that was intended at the start of the bridge, whether that was a sale or a refinance, and the current lender won't extend. But for us, for a rebridge, the bar is higher in terms of being able to demonstrate why they've been unable to exit the existing facility. So we need to see a very clear and achievable exit plan for a rebridge. And the fourth one is where there's no current borrowings on the asset. So essentially where there's an unencumbered residential asset. And in this scenario, what we're looking for is where a borrower has owned an asset or a portfolio prior to the end of last year, so prior to 31st of December, and they need to release capital on this asset for liquidity on that specific project. This is quite tight, this one, so this can only entail finishing or renovation works of up to 15% of the property value. It can't be used to re-gear the asset. It again needs to be demonstrated as part of this that they've been negatively impacted by COVID through, I guess, a delay to their original exit strategy or financing plan. So that's what we can do. Again, we want to be very clear on what we're not able to do under the scheme. So property purchases is ineligible. Borrowers that don't meet our net worth requirements, that 50% outside of the security. We won't be looking to refinance facilities that were in default prior to COVID, so March or before, unless there's a very clear reason behind it. We won't be providing capital for development works, so structural works we won't be doing. We can't provide capital for things like buying out of the shareholders. We won't look at projects of poor quality. Where there's been vacant residential units for longer than 6 months, that's not one for us. And just to reiterate, we can't lend against commercial, semi-commercial or land assets. So then viability, just defining what we mean by this. So our normal assessment will apply around standard credit criteria, and we'll cover this a bit more, but we will accept minor CCJs or HMR arrears that were in existence prior to 31st of December, as long as they're now cleared, and also any CCJs, as long as they're small, since the end of last year, as long as they are cleared pre-loan. We won't be accepting refinancings on loans that were in default prior to March, and we also won't look at where, well, the business undertaking difficulty test is one that has caused a bit of debate amongst people watching CBILS, but this essentially is an accumulated loss test or an insolvency test within trading entities, so we need to look at that at a group level. Similarly, anyone that's been in arrears on their mortgage, their primary residential mortgage prior to COVID, would not be considered viable, and where mortgage payment holidays have been taken since, we'll want a clear understanding of this and what it means for both viability and affordability, particularly where there's a refinancing as the exit route. Where there's planning issues that don't have a clear path to resolution, this won't work for us. And again, where the borrower's got a history of financial crime or fraud, it's a no from us. So I appreciate that's a lot of information. We can come back to questions at the end. Liam will now go through information requirements and process.
Thanks, Josh. So what we've tried to do is keep the information requirements similar to what we asked for with a standard bridging facility. It's just so we can try and keep the onboarding process as streamlined as possible. So what we will require is a complete application form. So the application form itself is similar to the one we currently use. but it's been updated so that we don't need a wet signature on the form, and it's a simple tick box. And you can actually fill that out on your client's behalf should you have their consent to do that. We need 6 months bank statements, which normally we take 3, but we do need 6 months for the CBILS application. We'll need some information on the background and the history of the business. So what does the client do? How long have they been doing it for? Do they specialise in a specific property type? And all the usual sort of information you provide us with on application. The external details of their property portfolio. So ideally, we'd want an A&L statement, an assets and liability statement. But if there's not one readily available, we do have one within the application form that gives us the required information for that application. Okay. We'll need the explanation of the self-certification of the negative COVID impact, as Josh mentioned earlier. So this is one of the core criteria and key scheme rules, and essentially confirms to us that the borrower has undertaken difficulty because of the global pandemic, which means that they qualify for the scheme. And with any bridging application, we'll need the details of the intended exit plan. So this is obviously one of the key elements of the facility and gives us details of how the borrower intends to repay it. We're always going to check this to ensure that the exit route is full and achievable within the facility. And evidence, we might ask for a decision in principle just to give us that conformity. Thank you. So now for some of the more technical information as to how our facilities will be structured for the borrower. So as Josh mentioned earlier, this interest for the facility is covered by the Government Business Interruption Payment, or BIP, for the first 12 months of the facility. So as we're only offering facilities up to a 12-month term, the loan is effectively interest-free for the borrower, as long as it's repaid on time. We will be utilising our risk-based pricing model to put together the facility terms for you and your borrower. Essentially, this will look at the security, leverage, LTV, experience of the borrower, the work that the borrower may have in their property portfolio, and the exit route to profile the risk within the facility and the monthly interest rate that should be applied to the facility. Okay, so our facilities come with a 0.5% arrangement fee, which will be added to the advance and not affect the net drawdown for the borrower. This is also covered by the government BIP and will not be payable by the borrower, and that is something that will be paid directly to us. We can charge up to a 2% broker fee on our CBILS Bridging Finance facilities. This will be payable to the broker upon a successful legal completion of the facility. This is not covered by the government BIP and will be deducted in advance. It's important to know as well that if we have to accept bridging finance CBILS applications, you registered Mr. Broker who are signed up to our terms and conditions. So following the webinar, we'll send further details around and a link so that you can register and sign up to those conditions. We will charge an early repayment fee, as Josh mentioned earlier, on our facilities of 2% of the balance at the time of redemption. However, this will only be applicable during the first 3 months and will become void after this period. Again, as Josh said, there will be no exit fees charged on the CBILS Bridging Finance facilities. So, in terms of security, it's important to note that we accept security over residential assets, no personal residences, for our bridging finance facilities. We'll not accept security over commercial property, semi-commercial property, or land, whether that's with or without planning. Again, it's also important to note that we will not accept stacking charges over any security class for these facilities. So, as we're dealing with limited companies, we'll be taking debentures on all of our facilities and may look to attain a corporate guarantee from a group or parent company if credit feel that the deal requires it, and if the guarantee effectively adds worth to that security package. So that'll be looked at on a case-by-case basis. We're taking personal guarantees for a facility below 250k. We're taking a PG on all facilities above that, as per the scheme that Josh mentioned earlier. And then, following our full recoveries process and realisation of the security, should there be a shortfall in our facility being repaid, we'll have the CBILS guarantee to fall back on, which covers us for 80% of any post-recovery loss. So some of you will be familiar with our current process and documentation currently for our with the new business process later on the application form has been dated so effectively we created a new app form. From the first glance it may look the same as the previous one, however we now have the ability for the application form to be signed via a tick box rather than a wet signature. So this should make life a lot easier for the borrower and streamline that approach. But there's also the ability for you to complete the application form on behalf of your clients should you have the relevant consent from them to do that. Okay, so the offer letter. We now have the ability, for our credit-backed offer letter to be e-signed by our borrowers. So again, this means that not only life will be made easy for the borrower with this, but we should also get that offer letter a lot more quickly. That then allows us to move on to the valuation and conveyancing stages of the which is obviously very important. And then there's the additional CBILS scheme documentation. So these are additional documents that must be included within the legal packs issued for the solicitors to the borrower. So they include the business payment offer letter, the BIP estimate, data protection and disclosure declaration, and information declaration. All of our legal documentation will be issued for our solicitors during the conveyancing process as normal. So now I'm going to take you through our process for new business, which can easily be split down into 4 different stages. So we've got our broker sign up. So we're ready now to accept inquiries and applications for our registered introducers. If you are a new introducer to Ultimate Finance, we'll need you to register and sign up to our terms and conditions before we're able to deal with that inquiry or application. So following the webinar, that link will be sent around, so please ensure that you do register before you send us any inquiries or applications. The next stage is the application stage itself. So one of our regional sales directors will pick up on your inquiry. If you already have a relationship with one of our sales team and you can continue to send inquiries to them, they will discuss the case with you, and if it's something that fits criteria, we'll issue with a quote or an indicative offer. This will be accompanied by our application form, which again doesn't need to be printed off, signed, scanned, sent back, so it will just be ticked and sent back via email. There's also the ability for you to complete the application form on behalf of your client. This must then be sent to your regional sales director. If you haven't previously sent any inquiries through Ultimate Finance, we'll ensure that regional sales director is allocated to your account. Again, please ensure that you register before we get to this stage. Okay, the next stage is effectively the sales team process. So following discussions with yourself and the client, the sales team will review the application along with our due diligence search, and will complete the new business report and submit to our designated credit team. Once the underwriters are happy with the facility, they will issue a deal approval. Normally, this is done within the first 24 hours from the case being submitted. This can sometimes take a little bit longer depending on the complexity of the case and potential requirements of further information, but we do try and keep that within that first 24 hours. So to keep this to that shortest time scale as possible, we ask that you get all the required information as soon as possible in the application journey. So following that approval, a formal credit-backed offer letter will be issued detailing all the facility terms and conditions, including any pre-conditions or post-conditions. And again, further development with this offer letter introduced for CBILS is that the borrower can now electronically sign the offer letter. It's going to make it much more efficient process for everyone involved, and it also means we can move on to the next stage of the process a lot quicker, which is the client onboarding stage. So this is probably the most important stage of the process, and it's where everything is brought together and we get the funds out. We will complete our ID and verification checks for a piece of software called Nevo. So you may have heard of Nevo, but if not, Nevo uses a secure channel to confirm the client's ID. We will send them a custom link to download the application to their smartphone. From there, they will follow the simple steps to take a picture of their driver's license or passport and perform some actions on a short video to confirm they are who they say they are. This can all be done in a matter of minutes, and it does really speed things up. And if the borrower is struggling with the application, there's a secure messaging service which gives them direct access to one of our Nevo agents who can assist them through the process. Now it's valuation and conveyancing time. As we all know, not only can these stages make or break a bridging financing inquiry, but they also the longest stage of any onboarding process. So it's important we move swiftly to get to these stages. Ultimately, we have panels of approved and experienced valuers and solicitors who will not only just move quickly, but also ensure that the deal is getting looked at correctly for the borrower. So we're all about client service at Ultimate Finance. So prior to completion of any bridging finance facility, we will ensure that the borrower receives a pre-completion call with either the sales team or one of our portfolio team. Now we do this to make sure that the borrower is aware of the terms of the facility and post conditions that may have an impact on the viability of the facility continuing, and also the repayment terms of the facility. Okay, so once we have the legal documents and report on title returned by the solicitor, along with confirmation from our sales and credit teams that all preconditions have been satisfied, we'll then release funds through the solicitors who will follow the relevant channels for the completion of that facility, depending on the scenario. Upon confirmation of completion from our solicitors that we've completed the deal, we will arrange for your broker fee to be paid over. Okay, so the launch plan for CBILS. So we've spoken a lot this morning about what we are going to be able to do, but we now need to give you our plans on launching the CBILS Bridging Finance facility. As you'll have seen, we were accredited by British Business Bank on Monday for CBILS-backed Bridging facilities. We're obviously holding our launch webinar now, giving our partners the information required for our CBILS product and the processes that are surrounding that. The product will officially go live tomorrow, the 9th of July. At this point, we will be able to receive inquiries and applications from our registered introducers. And then once we've officially gone live tomorrow, we will distribute the full materials to you, giving you the information required on the product offering. Okay, so the majority of this morning has been about what we can now do for borrowers through our CBILS-backed Bridging Finance, but we thought it'd be beneficial for you just to see how we've supported our borrowers through the coronavirus pandemic and the subsequent economic fallout from this. So in March and April, we had a vast number of redemptions lined up to the tune of £7 million. So the majority of them would be facilitated that be a buy-to-let mortgage or a development finance facility. But slowly but surely, all lenders with offers on these facilities pull back from the market, whether that be a partial adjustment in criteria or they entirely stop lending. And that left the clients without the ability to repair their facilities on time and their facilities effectively into default. So through our portfolio management team, we've been able to restructure 96% of those facilities which have fallen into default and offer extensions to the borrower so that they had more time to allow the market to recover and for their exit or their redemption to be facilitated. This gave the borrowers that reassurance that their hard work wasn't going to be totally undone by something that really wasn't in their control. Okay, so as you'll no doubt know, and probably have experienced yourselves with some of your applications with lenders, it became near impossible to obtain a full valuation of a property with an internal inspection in place during the first couple of months of lockdown. Even where social distancing measures could be implemented, surveyors were reluctant, understandably so, to inspect the property internally. So we didn't want that to stop being able to move forward with facilities, and we want to continue to support our borrowers and introducers. So I had to look at a way in which we could vary our approach to valuations. So we made the decision to utilise desktop and or drive-by valuations, depending on the case, where we could, with the occupant of the property providing photographs or videos of the inside of the property to provide an indication of the condition of that property. And then moving on to conveyancing, so face-to-face sign-ups of legal documentation became very difficult, and again, a varied, more modern approach was needed. The decision was made that legal documents did not have to be signed physically in front of solicitors, and a solicitor could now witness the signing of those documents via a video call. ID&V could be performed via NEVO without certified ID being required. Independent legal advice could be given via a video call. and solicitors did not require the original wet signature on legal documents to allow completion to take place. So they could take scanned copies of documents. Okay, so just an update on where we're at now. So we've just recently passed the 100 days of lockdown mark, which is crazy. So where we are now, redemptions wise, June saw one of our largest months on record for facility redemptions, with over £4 million being redeemed. It was encouraging to see that the exits for these facilities coming from both sales and refinances. And again, July is set to follow the same trend, which is encouraging to see. And then in terms of inquiry levels, the number of new facility inquiries that we are seeing is starting to increase back to pre-COVID-19 levels, which is good to see. The other encouraging element to this is that we're starting to see, we aren't just seeing refinance opportunities, but we are seeing investors looking to purchase new investment properties or project properties again, which is great to see.
Thanks, Liam. Just to finish on a few concluding remarks from me, really, we recognise that there could be and hope there could be significant demand for our CBILS offering here. We're seeing this as an opportunity to do two things, really. It's to support our long-standing broker partners and also develop new relationships. So we want to showcase our service quality and hopefully set some foundations for doing more together once the CBILS scheme is over. We are more than just a CBILS lender. Here you can see our non-CBILS offering as well. It's important to remember during the next 2.5 months while this CBILS scheme is open, we cannot do everything. The parameters that BBB have set us means we'll need to be rigid on writing high quality business against our criteria. Please stick with us as we work through and process what we expect could be a lot of volume. We're setting ourselves up to work at speed and at scale. We've got daily deal committees in the diary for myself, Liam, and all of the underwriting team, so we will get through things as quickly as we can. And obviously, as we begin working on applications together from tomorrow, please do not hesitate to share your feedback about the experience you or your clients have with working with us, because we want to build on this and establish that relationship going forward. And then just a recap on our full product offering across Ultimate Finance. For CBILS, as well as bridging, we can offer 3 additional products: asset finance CBILS, CBILS term loans alongside an invoice finance facility, and also a structured finance solution that can cover multiple asset types and potentially multiple CBILS types. And more information on these can be found on our website or speak to your sales contact. And then really it's our bread and butter on our non-CBILS offering. So invoice finance, somewhat pushed to the back of the queue as debtor books have dwindled, but I do truly believe this is the best long-term flexible financing structure for any business trading on credit terms with other businesses to provide that working capital needed to rebuild and grow their business. Asset finance, we're already seeing significant demand for. Actually, the last 6 weeks have been very busy there, recognising really that revival and growth is impossible for a lot of business types without investing in the assets and equipment that enables this to happen. So overall, we're very confident that we have a very strong product set and well suited for the revival and recovery stage of the economy. Personal view, the banks and the main banks will retrench from the SME space once again, particularly when the political spotlight is off and they'll be digesting the many billions of support they've given, and therefore the type of business that can get bank finance will grow ever smaller. So really for us, it's the ability to come to one place with a sales team that can genuinely deliver across multiple products. That's our USP. But above all else, our proposition is all about our core service strength and our quality there. And we look forward to backing up these words with actions in the coming weeks and months. So just to come through into questions, we've had quite a few, which is excellent. So please keep sending them in and we'll work through them. First one's, we've had this a few times, will the slides be available after the webinar? So as Liam mentioned, we will send the slides round as well as other materials, including the criteria sheets tomorrow once we go live with launch, as well as the recording from this webinar should you wish to listen back. Land with planning for residential use is a no, it has to be residential use today, not land with planning. Can a bridging loan, CBILS bridging loan, be used to repay a failed exit bridge where COVID caused delays and exit not achieved in time. Case by case on this one, in theory, yes. I think it's just understanding why it's been a failed exit, and was it really COVID that caused the delay, or was it prone to failure beforehand? Can this be used to complete a property being converted into an HMO, or would you consider that structural? Again, it's going to depend on the exact nature and quantum of the works and how long it will take on that one, Belinda. Cannot be used for purchase. I can confirm it's not able to be used for a purchase. Size of CCJ is again going to be relative to the size of the loan and the nature of the full proposal in front of us. There's a question around information required when submitting an application. So as part of the documentation you receive tomorrow, you'll see our application form. There's nothing too onerous on there. Liam has covered the main points on that. Just working through. So turnaround time for decision and loans issued. So we will go as quickly as we can. We will not be. We'll give you a quick no if it's a no, put it that way, and we'll go through as quickly as we can on everything else. Not available to LLPs. So this is only available to limited companies. So question on will we send application forms today, and are we live and ready to accept them with immediate effect? The answer on that is no, but we will be from tomorrow morning, and you'll be sent that out as soon as we are live in the morning. Expect that to be first thing. How long will the process take in rough terms? Again, it depends. If we get all the information required, we back ourselves to give a credit backed offer 24 hours from receipt of the full set of information we need, and then we're in the hands to some extent to the valuers and the solicitors. Regarding our registration process, if you already signed up for invoice finance and asset finance, it's highly likely that your terms and conditions already covers bridging. So if you've signed up to our introduced terms and conditions in the last 12 months, that will be covered. But please just check if you want to understand exactly what you're registered for, but I do expect you will be. Basis of the valuation, so we won't be going out on 180-day values, we'll be looking at the full open market values. In terms of what fees are covered by the BIP, so as Liam mentioned, it's just the arrangement fee that's covered by the arrangement fee that gets payable to us. The 0.5% is covered. The valuation and solicitor's fees are not covered by the BIP. The client will pay these directly to the respective firms up front. In terms of completion by the end of September, so we have to have completed upon the facility by the end of September for it to be valid under the scheme. That's the current expectation. I think as we get closer to that deadline, certain things may be clarified, and I wouldn't be surprised if that's one that may change over time. Will third party fees be covered? We've mentioned that one. Question on information out on term loans. So just to go back onto our term loan CBILS accreditation, all we can do there, it's a very specific product. It is alongside an invoice finance facility, whether that's an existing client or a new client. And Darren, you asked that question. The information on that is on our website. I'm happy to send you across some more stuff if that's helpful. Please email me afterwards. And Daniel's question: can CBILS only be granted to a limited company? For this bridging offering, that is yes for us. Others may be taking a different view on it. Question on interest rolled up and payable at the end. Is this possible? So in theory, yes, but the interest is obviously paid by the government BIP. So it's in the best interest of the client for it to be on a service basis, so you can release more capital to them and they get the full interest paid as they go, rather than relying on the client to pay at the end. Maximum term for our CBILS facilities. So for bridging, it's £2.5 million. For term loans alongside an invoice finance facility, it's £500,000. We go up to 5 million on an invoice finance facility. And for asset finance CBILS, it's £1 million per client, £500,000 per asset. Will the funds run out on CBILS like other lenders? So the way the scheme works is it's demand led and set by BBB, and so they allocate a portion of funds at the start based on historic volumes and forecast objections. So we're in constant contact and dialogue with them about that. We do expect there to be significant demand. It's hard to call. We'll be working on extending our allocation as soon as we can, but we've got enough for now. Do we have any objection to making clients aware today? Absolutely not. Please do make them aware. You've got the information from us here today. You'll have more materials that you can send out from tomorrow, but no issue at all with you advertising it today. Can the bridge include the sum to refinance out the bounce back loan? Yes, it can. So we obviously have to repay the bounce back loan as part of it, and we can release that capital for it. Another question about valuation and legals covered under the scheme. The answer is no, the client has to pay that directly. Sorry, just working through some. So the property have to be owned for a minimum period of time. Ownership from before December 31st, 2019 is what we're looking for here. That's what the scheme stipulates really. It's viability pre that. If it's mixed use but security and bridge is required. So we can't split out title on this. If it's a semi-commercial security, then we can't just finance the residential part of it. It has to just be residential only. Can we start our registration process today? Yes, you can. Immediately after this webinar, you'll get an email with details on how to sign up if you're not already signed up. Can we lend to a UK limited company where the director shareholder lives overseas? Unlikely, but again, case by case, we'll be looking for tangible worth in the UK. That may not necessarily need to be them being a resident of the UK, but we will certainly want to see that or some substantial worth in the UK. Can second charge lenders remain in place or second charge equity holder? Behind us, again, case by case, but in theory, that's possible, yes. Question from John around if the loan is against a client's primary residence, does the granting of the first charge? So we're not able to provide a loan against primary residence. So this is unregulated bridging only. We're not able to use primary residence for security whatsoever as part of this. Question from Daniel regarding refinancing some trucks and scaffolding. So this would absolutely fit into our existing asset finance product, whether that's CBILS or non-CBILS. So please do get in touch with us about that or any invoice finance queries that come along. From Simon, the CBILS term loan offer we have is, yes, it is dependent on having an invoice finance facility. Again, information on our website. I'm happy to share more of that, Simon, if that's helpful. Can the valuation and legal fees be funded by the raise of 15%? Although paid up front, they can be refunded. That will have to be case by case depending on the headroom to LTV, but potentially. So question, are we going off the 25% of turnover and twice annual wage bill or just a liquidity need? So the maximum loan size under the scheme is, as you rightly point out, is dictated by three things. It's 25% of turnover, 2 times annual wage bill, or the liquidity need. So we're just taking for bridging the liquidity need, recognising that annual wage bills will not reflect the assets within these sorts of entities. Question on are monthly repayments necessary? So no, they're not. As part of this, obviously the interest payments are met by the government's BIP. There's in theory nothing that needs to be repaid during the life of the term from the client, but we will, where it's a multiple security deal and assets are being sold as we go, we will look to take our funds down as securities, as sales are made. And again, another question on completion at the end of September. So we do need the loan to be complete by then. That's our current expectation. That may change as we go through, and we'll update as we know more, but that's in the hands of BBB and the government. So question on furloughed staff. So we have, as some of you will know, we've furloughed a very small minority of our sales team. We'll be bringing people back over the next month, and in the meantime, there is plenty of coverage within the team to pick up on inquiry levels. A question from Curtis about whether we're taking direct inquiries or if it's just a broker-only led product. We are taking direct inquiries. We don't expect to receive much. We don't have a large direct channel whatsoever, and so hence this today being the kickoff, we're expecting the vast majority of what we do to come through this channel. Will we be offering the facility for Irish registered companies? The answer is no. This would just be UK, so England, Scotland and Wales. We don't have a presence in Ireland, whether that's north or south of the border. And that, I believe, is all of the questions that have come in. Thank you. There's been some great questions there. And as I said, we will send registration link immediately following this, and tomorrow upon go live you will receive the full pack of information, including the slides, recording and our criteria sheet and our application form. Thank you all for attending and listening, and we look forward to working with you on this journey.